Welcome to the Thomson Reuters Idea of the Week and Alpha Now. I'm John Cozy. With the Dow Industrials making a new all-time high, it's time to visit our StarMine quarterly sector outlook of the S&P 500. We hope it will help you understand how things look quantitatively for the coming months. StarMine model showed 3 months ago the strongest aggregate model scores belong to financials, up 14% in orange since then, compared to the S&P in blue, up 9%. Plus, our highlighted stock names with strong model scores outperformed on average. Weak model names underperformed. We took StarMine model scores for each company and applied market cap weight to get a composite look at each sector. Let's take a look at some takeaways. Consumer discretionary is the sector the market seems to love the most. StarMine shows sell-side analysts 5-year compound earnings growth is actually below the growth expected by the market based on share prices today because of Amazon's heavy weight in the sector. Even if you take Amazon out, the discretionary ties for the tightest spread between analyst forecasts compared to how the market's pricing shares along with consumer staples and healthcare. In our most unloved category, the numbers are worst for utilities. The sector has the lowest earnings growth forecast and the lowest market expectations for the next 5 years. The sector also has the lowest overall model scores in 4 of 11 models. What's the best looking sector for analyst EPS growth 5 years out? Financials are on top again with an 11% forecast, and that's after StarMine adjusts for positive bias in growth forecasts. Financials also show the greatest disconnect between analyst and market implied growth rates. The sector seems pulled in opposite directions. It carries 5 number 1 ranks out of the 11 StarMine models, up from last quarter when it won in 2 model categories. But financials also show bottom ranks in 2 credit default models, same as last quarter. Speaking of weak ranks, consumer discretionary comes in at the bottom of all sectors in both relative value and intrinsic valuation, and without any top ranks. This sector looks relatively expensive, even with Amazon excluded. And finally, we have a sector that appeals to 2 investment styles: telecom services, with 80% of the sector weight made up of AT&T and Verizon, and with their fat dividend yields. If you're a contrarian, then telecom's got the lowest price momentum rank of the 10 sectors, even lower than energy. And telecom remains a good bet if you want to sleep well at night, ranking as the best sector for relative valuation. For more sector observations, read the text article along with this video available on alpha-now.com. That's where we'll also be mentioning some stocks to watch in each sector. Thanks for watching. I'm John Cozy.